Hey guys, welcome. Today, we're going to talk about NIO, a Chinese electric car company whose stock price shot up over 3,500% in less than a year and a half. In this video, we're going to cover what NIO is, why so many people are excited about it, what analysts are saying about it, some regulatory and competition problems it may face, and ultimately, we're going to talk about why NIO is an absolutely great investment right now. Smash that like button and don't forget to subscribe. NIO is an electric car company based out of Shanghai. NIO opened its doors in 2014 and almost immediately received investments from several other large Chinese companies such as Baidu and Lenovo. NIO's first car, the EP9 sports car, came out in 2016, the same year that NIO got its autonomous vehicle testing permit in California to begin testing out self-driving cars it manufactures on open roads. In May of 2018, NIO opened its first battery swap station in Guangdong. And in September of that same year, NIO IPO'd for $1.8 billion on the New York Stock Exchange. Despite a strong start out of the gate, NIO found itself struggling to sell cars right away. Luckily, in 2020, NIO received about $1 billion in funding from new investors, launching Battery as the service alongside three other firms: Contemporary Amperex Technology Co., Ltd., Hubby Science Technology Investment Group Co., and a subsidiary of Guotai Junan International Holdings Limited, less than a year later. NIO has three divisions: NIO Life, NIO Service, and NIO Power, which focus on clothing, service centers, and batteries and chargers respectively, and four models: the EP9, the EC6, the ES6, and the ES8, with another four models that are on their way. So where's NIO at today? In short, they're crushing it. China is the world's largest electric vehicle market, and NIO is far and away the biggest manufacturer of electric cars there. What sets NIO apart is that their focus isn't battery charging, but rather battery swapping. So instead of having to hook a car up to an outlet and wait, NIO lets you simply roll up to one of their battery swap stations and switch out your dying battery for a fully charged one. This is a huge advantage in China, because over 90% of the population lives in apartment buildings, and therefore it could be very inconvenient for them to actually charge a battery. After a stellar December and January in sales, NIO is up more than 1,000% since last May. In general, the EV market has been booming this past couple of years, largely due to the highly publicized success of Tesla Motors since 2018. In fact, from 2014 to 2019, the number of electric cars on the market rose from 400,000 to 4.7 million. What's more, with the recent election of Joe Biden in the United States, a conversion from gasoline-powered cars to electric vehicles has been a state priority of the incoming administration. And NIO isn't just containing themselves to China, the world's largest EV market. NIO announced in 2020 that it plans to sell its first electric car in Europe, the world's second largest EV market, as early as the second half of this year. Of course, it isn't all rosy for NIO. On Friday, February 5th, after articles like "NIO investors hit the jackpot, now cash out," and "Here's what to do if NIO stock starts dipping sharply lower," and others like it, NIO stock dipped. In fact, as of February 8th, NIO stock is actually lower than it was a month ago in early January. Some of that dip could be accounted for the fact that some analysts such as Citi's Jeff Chung became slightly less bullish on the stock after it shot up. Additionally, Volvo and Baidu, the Chinese Google equivalent, announced a partnership to develop Level 4 automated vehicles in China, the current highest level of automation produced and the level of automation that NIO is currently hoping to get its cars to operate at. Cathie Wood, the head of ARK Investment, who we've mentioned before on the channel, has invested heavily in Baidu, showing she's very bullish on the stock. Since Cathie is a well-respected eye for future stock movements, as exemplified by her early calls in NNDM, this could mean that Baidu and Volvo's joint venture could pose some serious competition for NIO. That being said, however, Wood did recently tweet, and I quote, "NIO will win the day in China," end quote. Although she doesn't actually own any NIO and does own massive amounts of both Baidu and Tesla, so take that with a grain of salt. Despite the potential competition and the dip experienced earlier this year, most of the news coming out about NIO is fairly positive. In February of this year, NIO announced an expanded partnership with Hefei government in China. It was the Hefei government that gave NIO the nearly $1 billion cash infusion that they needed to stay afloat back in April of 2020. And this newly expanded partnership includes a world-class smart electric vehicle industrial campus. What's more, in January, Dutch bank analyst Edison Yu raised his estimation of the company's stock price target from 50 per share to 70. Martin Hyung of Nomura gave NIO a buy rating and a price target of $80.30 a share, and Tim Hsiao of Morgan Stanley raised NIO's price target on January 28th from $33 to $80 a share. On February 1st, NIO published its most recent vehicle delivery data, and it's delighted investors. NIO had delivered 7,225 vehicles in January, a number which represented a 352% increase compared to the January prior. So what's the future of NIO looking like? Well, in brief, it looks bright. I personally think that NIO is a stock whose price will continue to rise. Money CNN has a price target set for NIO of $69.20, which is relatively low, and that already represents an over 20% increase from its current stock price. NIO had a rough week last week, and the week before, but so did everyone in the market because of all the craziness of that GameStop saga. Cathie Wood is bullish on NIO. NIO is expanding to Europe. Its main competition is Tesla, which exists mainly in the States and not in NIO's other markets, and Volvo and Baidu, which is largely focused on automated vehicles, is not necessarily the battery-swapping electric vehicles that help NIO stand out so much from the crowd. Another big boon for NIO that we haven't mentioned yet is that the Biden administration's big plans for electric vehicles mean that it's way more likely now than it was previously that NIO will be able to expand to the States. If they do, of course, this will bring NIO head-to-head with its largest potential competitor, Tesla. But with everything that sets NIO apart, all the ways it's innovating, I'm still confident that NIO would be able to find its footing in a new market. NIO has a wonderful partner in the Hefei government, and with the continuing boom of the electric vehicle market in general, fueled by both Tesla and increased awareness of the environmental harm done by gas-powered cars, NIO is in a great position to see massive gains in the next couple of years. NIO isn't perfect. The company suffers from regulatory concerns and transparency issues, and not everyone thinks it's necessarily a great buy. TipRanks, for example, is very divided, with 7 buy ratings and 6 hold ratings. However, I think that there's enough there when it comes to market share, innovation, momentum, and positive attention flowing NIO's way that I'd say it's a good investment. So guys, that's the story of NIO, a company that many call the Chinese Tesla that's quickly taking the electric vehicle world by storm. A stock that top analysts praise and yet many don't actually own. A stock that seems to randomly shoot up and then gradually come down. And a stock that, by my estimate, would make an excellent, if slightly risky, addition to your portfolio. But what do you think? Let's hear your thoughts down in the comments section below. Are you bullish or bearish on NIO, and why? If you like what you saw, remember to smash that like button, and subscribe and turn on notifications so you don't miss more videos. I'll see you in the next one. Take care.